Hello friends, this is Raj Sastry from Raj Option Trading. Today I want to talk about option trading ideas for this week. That's the week of May 3rd, 2021. With that, we'll look at buying stocks, buying call options or call spread, and also also selling put options. So with that, let's get started. First, let's look at trading ideas where there is a TTM squeeze. So TTM trade is by John Carter. This is when the Bollinger Band gets inside the Keltner Tunnel. That's the technical jargon. But thought process is when there is a TTM squeeze, whether it's 1 day, 3 day, 1 week, or 1 month, that's when you can expect the chart or the stock to basically expand either on the higher side or the lower side. The trick is to really understand whether it will expand to the higher side or the lower side. So with that, I have got list of companies here, Q, Global Blood, eHealth, and so on and so forth. And I also indicated, whether there is a 1 day squeeze by indicating yes here, or a 3 day squeeze, 1 week squeeze, or a 1 month squeeze. And the thought process is, when there is a 1 day squeeze, that will last for a couple days. When there is a 3 day squeeze, it will last for couple say increments of 3 days, maybe 3 days, 6 day, 9 days, something along those lines. When there is a 1 week squeeze, it will last for weeks. When there is a 1 month squeeze, it will last for months. So depending on your trading style, if you're a little bit daily type trader, you could look at 1 day trade. But if you want a little bit longer term trend, you could look at 3 day, 1 week, or 1 month type trend. So with that, when we buy call options or even stock for that matter, you want to make sure the IV percentile is relatively low, because when you're an option buyer, you don't want to pay too much. When the IV percentile is high, you are paying too much for the option. And put call ratio is something to keep in mind. Typically, when the put call ratio is low, that means a lot of people are buying calls. But when the put call ratio is high, as example in Global Blood Therapeutics, put call ratio is so high, that indicates a lot of people are really buying put options. They think stock might go down. Sometimes it's a contrarian indicator. When there is so many people buying put option, you could be a contrarian and you could buy stock or the call option. Then the RSIs. RSI is very important. When you're buying call options or even buying the stock, you want to make sure RSI is relatively low, because RSI indicates whether the stock is overbought or oversold. The moment RSI is lower than 50, that tells you, stock is really oversold at this point. So it's okay to buy. It's a good entry level. As usual, we always want to look at the sales growth, and gross margin. And when you're buying the stock or even buying call option or a call spread, you want to make sure the sales growth is there and there is good gross margin. You want to basically buy companies that are fundamentally sound. And also we look at float short. We want, sometimes a float short will cause a short squeeze. We have to look at that carefully. And I also highlighted the price to sales ratio. Sometimes stocks are more expensive. You got to be paying a close attention. And we also have 1 year return and a difference from 52-week high, and also 3 month return. So with that, I will not look at each and every stock, but we'll look at couple them in a little more detail, and go from there. So first, what I will do is I will look at one or two of them and go from there. So let's look at eHealth. It's EHTH. As you can see, a stock is $70 stock, and PC ratio is 0.41. IV percentile shows 0 at this point. That's interesting. And oh, you know what? Let's not go for this one because there is no sales growth. I would rather go for a stock with a good sales growth. For that, let's look at probably this one here, Mercury Systems, MRCY. So with that, let's go to Thinkorswim here, and I'll go to MRCY. And let's look at John Carter's TTM trade here. As you can see here, Mercury, we got a squeeze on the 1 day chart. And as you can see here, the longer term wave is above zero, but it's a little bit what do you say, dark blue. That means, basically use some caution. It's still above zero, but it's dark blue. So, this is not a great setup for us. So we'll skip this one and we'll probably take the next one. So as I scan through this, let's look at a couple more here. There is a here Grupo Anali Pharma. Anali Pharma could be a good one. It's a $140 stock. Let's look at this one here. And there is a, oh, this is an interesting one. There is a squeeze in the 3-day, 1 week, and 1 month. That's a better setup. So with that, let's go to Anali. So NLE form, as we can see here, we got a squeeze here, daily chart. The shorter term wave, A wave is above zero, longer term wave is below zero. That's a little bit not a good setup. And if you look at 2-day chart, I think we got positive trend going. It's above zero in the longer term wave also. If you look at 5-day, we got a squeeze forming. We got lines on the lower side, and the longer term wave is above zero, and this is also not a perfect setup. We'll ignore this one too, and we'll look at the next one here. For that, let's look at, maybe let's go to next page here, and we can look at some good setups here. So ARTS is a $3 stock. We'll ignore that. Let's look at some of this here. ANSYS. ANSYS could be a good one. There is a daily setup here. Let's look at ANSYS, ANSS. So ANSYS, as you can see, there's a 1-day squeeze here. Line is above zero on the A wave. Line is above zero on the C wave, which is longer term wave, and it's light blue, indicating that it's a strength into this stock. So this could be a good setup here. And let's look at the bigger chart here quickly. If you look at the bigger chart here, ANSYS stock is doing nicely. Volume is moving on the balance. Volume is going up. RSI a little bit lower. It's a little bit bullish at this point and turning. I think the blue line is above red line. That's good. Check-in money is indicating there is a money flowing into the stock. Let's take this one and let's enter a trade here. So let's go to trade tab. As an option buyer, you want to make sure you want to be a little bit longer term. So we'll go to 165. So 365 is the stock price. So I could do 360, 370 spread. I could buy this spread. So I'm paying $4.70 for this spread. The remaining, is a $10 wide spread. Remaining $5.30 is my profit potential. So with that, let me confirm and send. So as you can see here, my max loss is the money I paid to buy the option, and my max profit is the 530 here. It's a good double your money type trade. I would go take this trade. So next, let's look at a low IV percentile and a low RSI. Here also, here we are looking at a low RSI and a low IV percentile, and these are the good setup to buy stock or call option or call spread. So with that, first let's look at Plug Power, ticker symbol PLUG. All right, so plug, as we look at this, let's go to bigger chart here. Chart is indicating, it's trying to get stabilized here. On the balance, volume is pretty stable. It's at this point, it's bearish. The blue line is below red line. And check-in money flow is indicating there is not significant money flow into the stock. So with that, let's look at the trading ideas here. And go to option chain. Let's look at, in this case also, I want to, as an option buyer, I want to be outside like 137 days in this scenario. Stock price is 28. So I could easily do 25 to 35 spread. There you go. So I'm paying, $3.68, and the remaining, basically, $10 is a spread. $3 and 68 cents is what I'm paying. If I confirm and send, as you can see here, my profit potential is 632, and money that I will lose, the max is what I paid, 368. So I could confirm and send this. But if you're a little bit conservative, you could also do a 20-30 spread. So something like this. Let me close this. A 20-30 spread, if I buy that, there you go. So I'm paying $5.08, a little bit higher, but I think it's a little bit conservative play. Stock price is at $28, but I will break even if the stock price is above $25.08. It's a little conservative play. This could be a better option here, if you want to be a little less aggressive. So with that, let's go into maybe one more idea here. For that, let me go to the next slide here. Look at, let's see here. This is a good medical properties, $22 stock. You could do this one also. I'm trying to see here, price to sales, that's good. Or Cirrus Logic could be a good one. Cirrus Logic had earnings last week. Let's look at Cirrus Logic. So Cirrus Logic, if I go to chart here, I think nice looking chart, stock dropped after the earnings. Chart is ugly as usual, but check-in money flow is indicating money is flowing into the stock, which is a good sign. So with that, let's go to option chain here. Stock is at 74. I could easily do 70-80 spread. So let's do that. There you go. I'm paying $4.90, and remaining portion of the $10 spread, which is $5.10, is my profit potential. It's a double your money type play. I would confirm and send. Max money you lose is the money that you paid to buy the spread. And if you can also buy the 70 spread 70, if you want to buy call option outright, you could buy 70 delta or higher. You could do something along, if you see here delta, we got 74 delta. You could buy this, and you can pay $13.30. This is the other way to play. Or you could even buy the stock outright. Cirrus Logic is a great stock. You could buy this outright also. For our last idea, you could look at these, in YouTube. You can pause and look at this and see what makes sense to you. For the last one, let's look at high IV percentile. When the IV percentile is high, you want to be a premium seller. So as we can see here, many of these stocks have got high IV percentile, 53, 79. So when the IV percentile is high, you could sell some put options or put spreads, and make profit that way. So I will probably look at some of these stocks here. As an example, I could look at SailPoint. SailPoint is one of my favorite stocks. These guys are into security. One thing to look at this is really there is a earning coming out on 5/10, so you got to be watching out a little bit. You don't know how it will play out, but if you want to play this, I would go to SailPoint here. And if you go to the chart here, as you can see here, earnings is coming 5/10. Nice looking chart. Nice, on the balance volume, and check-in money flow is a little bit negative at this point. And if you want to buy, if you want to sell put option here, $48 stock, you would want to go like, not more than 50 days. So 46 days is good. And you could, sell a put option at, if you, say delta 37, delta 50. I think you could do somewhere here, delta, delta, I think this could be a good one, delta 37. And you could sell, you'll get 80 cents here. And if I confirm and send, your max profit is 80 cents or $80 in this scenario. Max loss is high. This is one way to play, but I don't see too much risk reward here. So you could, probably look at, one more play here. Let's go to one more. As you scan through here, IV percentile, T-Mobile, Uptech. This one is 90. Electronic Arts could be good one here. Earnings is coming 511. So with that, let's go to Electronic Arts. It's one of my favorites. So EA, as you can see, your stock is doing okay. There is a big down candle here on Friday. Nice on the balance, volume. That's good. And check-in money flow is flat to down. So with that, let's go into EA, $142 stock, 46 days out. We want to be premium seller. We don't want to expose ourselves too long. 46 days is good enough. 142 stock price. So here I think there is a good play here. So depending on how much risk you want to take, you could buy, you could sell something like, if you want to be conservative, you could just sell one leg, say 120 or even 125. You could sell this put option. You can bring in $1.27, and as you can see here, max loss is 12,373. That's as if you're going to buy this stock at $127 $125. So 125 times 100, it's along those lines. So this is one way to play. You are bullish on the stock, and you want to buy put option. This is a good way to play. But if you think it's too risky for you, you could even do a spread. You could do say 125 110 spread. You could sell that spread. Something along these lines. If you sell this spread, so you are buying, you are selling 125, you are buying 110. Your risk is $15 in this case. So it's a one way to play. So if I sell this spread, as you can see here, I'm selling this spread. I'm bringing in $127. My max loss is now much less. Before my max loss was one $12,500. Now it's much less. This is a different way to play if you're a little bit conservative, and you will probably sleep better at night with this type of trade. So with that, you got the list here. These are all the stocks with high IV percentile. As usual, I urge you to look at the earnings state, play a little bit cautiously. If there is a earnings coming, within your time frame, you would be a little more careful. But if the earnings has passed, like Marvel as example, earnings is already over, you could easily do a nice, put. You could sell a put option or a put spread, given there is a high IV percentile. So with that, it's a wrap. Thank you very much. Happy trading. I think some more here. IV percentile high. This is also a good candidate to sell put or a put spread. With that, thank you very much. Happy trading.